President Trump is in excellent cognitive and physical health, according to a medical report from his annual physical at Walter Reed Medical Center. The report, released by Navy Captain Sean Barbabella, notes Trump is 78 years old, 75 inches tall, weighs 224 pounds, and has normal blood pressure and heart rate. Trump has lost 20 pounds since his last exam in 2020 and shows no new health concerns. The report mentioned past medical procedures, including cataract surgery, a colonoscopy that found diverticulitis and a benign polyp, and scarring from a 2024 assassination attempt. The physician emphasized that Trump's active lifestyle significantly contributes to his strong cardiac, pulmonary, neurological, and overall health.
The Trump administration has filed 10 emergency requests to the Supreme Court in under 2 months, aiming to fast-track actions on immigration, federal agencies, and executive power. Experts note rising tension between the fast-acting executive branch and the slower, process-driven judicial system, with the court under rare pressure. Bypassing usual appeals, the administration relies on a conservative-leaning court to reverse lower rulings and support broad executive authority. While the court has sided with Trump on several issues, including deportations and education grant cuts, it has also issued occasional setbacks like ordering the return of a wrongly deported migrant. More sweeping actions are pending, including moves to end birthright citizenship, dismantle agencies, and invoke emergency powers to control tariffs and reshape education policy. Hedge funds initially profited from market turmoil triggered by Trump's Liberation Day tariffs, but were caught off guard when markets rebounded after he paused most tariffs. The S&P 500 lost $5.8 trillion in value before regaining $4 trillion, while Treasury bonds reversed direction unexpectedly, adding to market confusion. Even seasoned macro hedge funds struggle to predict the full ripple effects of the tariff news, highlighting the challenges of navigating such volatility. Many hedge funds turned bearish in March, with Goldman Sachs clients selling stocks at the highest rate in 12 years but had to adjust when the market unexpectedly surged. Some firms like Pershing Square suffered steep losses due to lack of hedges, while others such as Discovery Capital made timely shifts but still face declines amid the chaos. Most companies are adding clearly labeled tariff surcharges to customer invoices to offset rising costs from steep tariffs on Chinese goods, currently as high as 145%. Businesses like Jolly and Dame use these fees, sometimes humorously named Trump tariff surcharge, to be transparent and shift blame to Trump's trade policies. These charges vary, ranging from $5 flat fee to 40% of the subtotal, depending on the company and product. Some consumers appreciate the honesty, while others question the political messaging tied to these added costs. Companies are also employing other strategies like stockpiling inventory, negotiating with suppliers, and increasing prices to manage the impact of tariffs. Treasury Secretary Scott Bessent, a former hedge fund manager, convinced President Trump to pause global tariffs amid a market meltdown and escalating trade tensions with China. Bessent is navigating a risky political and economic path, blending Trump's populist agenda with traditional conservative economic strategies like deregulation and debt reduction. Despite his calm public demeanor, Bessent faced backlash from Wall Street as markets crashed and investors lost faith in U.S. economic stability due to unexpected tariff announcements. International leaders rushed to engage with Bessent as the Trump administration pivoted to a potential global alliance against China rather than broad unilateral tariffs. Although the rollback of tariffs briefly stabilized markets, the broader economic conflict with China continues, leaving investors wary and global growth at risk. JP Morgan CEO Jamie Dimon warned on Fox Business that Trump's aggressive tariff policy could lead to a recession, catching the attention of President Trump, who later referenced the interview multiple times. The interview took place on Maria Bartiromo's show, Mornings with Maria, which has become a key platform for CEOs and policymakers to influence Trump and the public. Bartiromo, a seasoned journalist with strong ties to Trump, discussed the interview and economic fallout with him directly following the tariff announcement. Trump's affinity for Fox News personalities has elevated the influence of shows like Bartiromo's, especially as business leaders seek ways to communicate policy concerns directly to him. Bartiromo, currently facing legal challenges from the 2020 election aftermath, remains a high-profile figure whose programs continue to grow in viewership and impact. Many Trump supporters like Melissa Sample remain loyal despite personal costs and economic uncertainty, trusting his leadership and viewing moves like the sweeping tariffs as part of a bigger strategy. Trump's recent imposition of the largest tariffs since the 1930s caused market turmoil, with Wall Street reacting negatively before partially rebounding after a 90-day pause was announced. The MAGA movement's loyalty is rooted in a personal bond with Trump, built over years through political and cultural battles, and remains strong even as sacrifices are now being asked. Supporters like Kenny Cook and Phil Gross believe Trump's bold trade moves are needed to revive American manufacturing and are willing to endure short-term pain for long-term gain. While some critics and investors panicked, others like Bill Ackman reversed course after Trump's pivot, reinforcing the belief that his unpredictability is actually strategic. In a secret December 2024 meeting, Chinese officials indirectly admitted to cyber attacks on U.S. infrastructure, which U.S. officials linked to China's Bold Typhoon campaign. The meeting, held in Geneva, included around 12 representatives from both countries, including U.S. intelligence, Pentagon, and State Department officials. China's Wang Lei implied the attacks were a response to U.S. military support for Taiwan, alarming American officials who saw it as a strategic warning. U.S. officials noted the cyber intrusions targeted ports, water utilities, and airports, presenting one of the most serious threats to national security. Separate cell typhoon operations reportedly compromised telecom networks like AT&T and Verizon, exposing calls and texts of high-level U.S. political figures. The U.S. and China have escalated their economic conflict, with President Trump raising tariffs on Chinese goods to 145% and China retaliating with 125% tariffs, significantly disrupting global trade. The trade war is already impacting businesses in both countries, causing canceled orders, factory shutdowns, job losses, and falling stock markets. U.S. companies relying on Chinese manufacturing are struggling with rising costs and operational uncertainty, while Chinese exporters are seeing a steep drop in American demand. The decoupling threatens long-standing economic ties that benefited both economies for decades, with American consumers facing higher prices and China losing access to its largest export markets. Economists warned the trade war could severely slow growth in both countries, forcing China to rethink its economic model and increasing the risk of a global economic downturn. President Trump announced a 90-day pause on most of his global tariffs following intense market backlash, which sparked relief and rallies across global stock markets. Economists and officials viewed the reversal as a sign of weakened U.S. negotiating leverage, with some suggesting Trump's credibility had diminished. The European Union suspended retaliatory tariffs during the pause, while countries like Vietnam and South Africa seized the opportunity to reopen trade talks with the U.S. China was excluded from the pause and continues to face steep tariffs of up to 145%, with tensions between the two countries still escalating. Despite the temporary truce, uncertainty remains high, with fears that the trade war could reignite, negatively impacting global investment, inflation, and growth. Peter Navarro, a key figure behind President Trump's aggressive tariff policies, remains influential despite widespread criticism and a recent pause in new tariffs. Navarro's hardline trade stance has caused tension with business leaders, lawmakers, and even Elon Musk, who publicly mocked him. Despite opposition, Trump values Navarro's loyalty, notably citing Navarro's jail time over the January 6th investigation as a sign of dedication. Trump's abrupt 90-day pause on new tariffs signaled a temporary retreat from Navarro's approach, which temporarily eased market fears. Still, Navarro continues to push for permanent tariffs and protectionist policies, keeping him central to Trump's trade strategy heading into the election season. In March, U.S. consumer prices unexpectedly fell by 0.1% month-over-month, the first decline since May 2020, driven largely by a sharp drop in gasoline prices. Year-over-year inflation cooled to 2.4%, below the expected 2.6%, while core inflation, excluding food and energy, rose just 2.8%, the smallest increase since March 2021. Despite the easing inflation data, economists cautioned that new tariffs announced by President Trump in April will likely reverse the trend and raise prices going forward. Travel-related costs like hotel rates and airline fares dropped in March, suggesting consumer nervousness, and Canadian tourism to the U.S. declined amid political tensions. Markets initially reacted positively to Trump pausing some tariffs, but stocks fell sharply Thursday as investors focused on the likely economic impact of those tariffs in the near future. U.S. bank CEOs like Jamie Dimon and David Solomon haven't had meaningful contact with President Trump since 2020, despite recent economic turbulence. Bankers are worried about the impact of Trump's new tariffs, with over $10 billion worth of deals possibly stalled across firms like JP Morgan and Morgan Stanley. Goldman Sachs executives provided feedback to administration officials, saying corporate clients were pessimistic, but Trump's team mostly just listened. Firms like JP Morgan and KKR have revised their forecasts, now expecting a recession triggered by the tariffs, with Morgan Stanley predicting a deeper downturn. Despite some levity, like a JP Morgan strategist using toy penguins in a webinar, the uncertainty has led private equity firms to freeze deals and reassess their portfolios for the third time since January. U.S. markets are experiencing a rare sell-everything American moment, with stocks, bonds, and the dollar all falling simultaneously. On Tuesday night, 10-year Treasury yields surged to 4.47%, and short-term yields rose despite expectations of Fed rate cuts, indicating market stress. The S&P 500 dropped alongside the U.S. dollar, signaling waning confidence from foreign investors in U.S. economic resilience. Hedge funds may be contributing to the Treasury sell-off by unwinding risky basis trades, while swap spreads are widening, a sign of rising instability. Despite the turmoil, no full-blown crisis is evident yet, as funding markets remain functional and the Fed is expected to intervene if necessary. Microsoft, Meta, Alphabet, and Amazon plan to invest over $270 billion in data centers this year to support the AI boom, according to Citigroup. The number is expected to grow to $325 billion in 2026, despite AI not yet delivering proportional profits. Tariffs and potential recession risks are threatening to slow down this aggressive spending, particularly as ad-reliant companies like Meta and Google face pressure. Amazon's return on AI investment is currently just 0.2 per $1 spent, compared to $4 per $1 in traditional cloud investments. Microsoft has already slowed construction projects and canceled data center leases, despite still planning to spend $80 billion this fiscal year. After initially staying quiet, many CEOs, including past Trump supporters, are now publicly criticizing President Trump's tariff policies due to rising economic concerns and recent market volatility. Executives like Ken Griffin and Bahram Akradi argue that tariffs will raise costs for American consumers and disrupt global supply chains, making the policy harmful in the short term. Hedge fund leaders Bill Ackman and Ray Dalio warned of serious economic fallout, with Ackman proposing a 90-day tariff pause and Dalio calling the plan impractical despite agreeing with its goals. Some companies like GameStop and Nintendo are already feeling the impact, and more CEOs are expected to face pressure to discuss tariff setbacks during upcoming earnings calls. Fear of political retribution has kept some corporate leaders silent, but growing frustration has sparked calls for trade groups to unite in opposing the tariffs and seeking international negotiations. Elon Musk has criticized the Trump administration's global tariff strategy, advocating instead for free trade and suggesting a US-Europe zero tariff zone. Tensions have risen within the White House as Musk targeted Trump advisor Peter Navarro, questioning his economic credibility and experience. Trump's sweeping new tariffs have rattled markets and sparked confusion over whether they are long-term policy or a short-term negotiation tactic. Prominent Trump supporter Bill Ackman called for a 90-day tariff pause, warning of severe economic consequences and accusing a Trump advisor of having a conflict of interest. While officials like Treasury Secretary Bassan viewed the tariffs as leverage for future negotiations, others like Navarro maintain a hardline stance against foreign trade practices. Lutnick, Commerce Secretary under President Trump, has played a central but controversial role in implementing the administration's tariff-heavy trade agenda, leaving many business leaders confused by his contradictory messages. He has met with dozens of CEOs but often switches positions, like supporting and then rejecting tariff exemptions, frustrating both executives and White House officials. Lutnick appears on TV frequently and reportedly visits the White House more than any other cabinet secretary, though even Trump has questioned his presence and emotional behavior. His unvetted policy suggestions, such as abolishing the IRS, offering $5 million gold cards for residency, and eliminating income tax under $150,000, have blindsided staff and stirred internet tension. Despite backlash, including criticism from allies like Bill Ackman and market volatility, Lutnick remains close to Trump, continuing to push his America First trade narrative. President Trump's new tariffs, including a 10% levy on all imports and higher rates for countries like China and India, may increase inflation and undercut goals to boost domestic manufacturing and tech infrastructure. Consumers are likely to face rising prices on imported goods such as groceries, clothing, and electronics, while pharmaceutical supply chains may be disrupted, threatening drug availability and affordability. Manufacturing could suffer due to higher input costs, despite Trump's claims that tariffs will stimulate domestic production and investment by firms like Apple. Data center development crucial to U.S. AI leadership may slow as tariffs raise costs on building materials and chips, potentially weakening national tech competitiveness. Although energy products are largely exempt, tariffs still impact construction of liquefied natural gas export facilities, a key part of Trump's energy dominance strategy. A luxury brothel operating from upscale apartments in Cambridge, Massachusetts, catered to elite clients, including biotech executives, lawyers, and politicians, charging up to $600 an hour. The brothel required clients to submit IDs and references, creating a detailed customer record that is now central to ongoing criminal hearings. Over 30 prominent men have been publicly named and charged with misdemeanors, including Cambridge counselor Paul Toner and biotech CEO Jonathan Lanphier. The Madam Han Lee was sentenced to 4 years in prison and ordered to forfeit $5.5 million after pleading guilty to prostitution-related charges. The scandal has sparked widespread public outcry, especially in liberal circles concerned with exploitation, while some companies continue to support their executives through legal proceedings. In just 78 days, President Trump has aggressively reshaped U.S. domestic and foreign policy, launching immigration crackdowns, slashing federal agencies, and imposing sweeping tariffs using rarely used executive powers. His actions have sparked both praise and backlash, with over 170 lawsuits filed, 50 injunctions issued, and mass protests erupting across the country and internationally. Trump's tariffs have caused major economic disruptions, wiping out $6.6 trillion in market value and prompting over 50 countries to seek trade talks, while others like China and the EU prepare retaliation. His cultural and institutional offensive has pressured universities and law firms to alter policies or face sanctions, aligning with his broader goal to dismantle liberal strongholds. Despite mixed results abroad and growing domestic anxiety, Trump's supporters see his assertive moves as fulfilling campaign promises and potentially setting the stage for a lasting political legacy.